All right, good morning. Hey, this is welcome to the market of the moment. This is a review of March numbers, but we're actually going to do it a little bit differently. Normally just compare last month's numbers, but today we're actually going to compare the first quarter of 2021. So we can do it a little differently so you can see some trends that are going to be, in my opinion, some trends that are going to continue for the next, at least the second and third quarter. If you never joined us for Market of the Moment, it's really we're just, again, going over the previous month, in this case, quarter. We're going to do a deep dive into certain MLS areas. I've selected 6 just based on the time today. And then we will do a little bit of a snapshot on market share, looking at top brokerages and agents in the Richmond market. Excuse me. And really, our goal is for you to just continue to be the local economist of choice. And you know where the puck is going. You guys are in the trenches every single day. You see firsthand what buyers are looking at, what sellers are asking for their properties. But sometimes people ask us a question like, hey, how's the market doing? And we give a generic answer like, oh, it's going great, or hey, it's a seller's market. Our goal with these market of the moments is to be able to give you some information where you can kind of organically have conversations with people so you're the local expert and you can spit out some basic data. Of course, you don't want to bore them to death, but you do need to know some of the numbers. Also, you can use the numbers for your marketing, prospecting, social media, so we want to make sure you're doing that. All right, well, let's dive in. If you're not familiar with all the MLS areas, these are a few that we'll cover. And this is where you find it. If you're looking yourself, you're going to log into your CBR MLS RAR login from Matrix. You'll see this pop up and you'll see this right here. These two that we typically look at today, we're going to look at the one that says market stats on the left-hand side. It looks like a bar graph, and you'll pull up this, looks like blue and white. So that is where I'm at. A little, again, if you've never navigated this before, it does default to this crazy line graph, which I don't like, so I change it to a bar graph. I would recommend just doing 2 years. And again, we're gonna do the rolling 3 months in this situation because we're gonna do quarterly. So this is all information from January, February, and March. And then this is the data here on the bottom. I also wanna make sure you guys realize that this is resale versus new construction. It defaults to all construction types. I think it's important for you to separate those two because they have a little bit of different data trends, which we'll talk about today. And then, of course, we can you can, if you want to, narrow it down, but we're going to keep it. This is for the entire MLS. All right, so average sales price for the first quarter, again, it defaults to median. So if you're doing this on your own, make sure you look at averages. All right, so average is 321, which is up 14%, which you probably are feeling those price increases, right? So, and my advice, if you're taking a listing and you are basically you're at a CMA price and your seller wants to push that price, I do see prices continuing to escalate, so you may want to try it at the higher price. Of course, if you don't see activity within those first few days, first few showings as far as offers, then you'll have to do a price reduction. But it looks like you can definitely push the pricing because the average price is up 14%. This is entirely all new listings for the first 3 months of the year. We listed over 5,000. You'll see we were closer to 6,000 last year. So we're almost down about 1,000 units from what we were last time. So just got to be aware of that. Our inventory is down 14%. Again, this is for first quarter. So we're seeing a huge, this trend is going to keep continuing. Our pending sales are not as high as they have been. So we could see the start to where buyers are getting frustrated and are just kind of renting or pulling back off the market because we overall in a 3-month span, we're only seeing a 1%, almost just under a 2% increase, which is less than 100 units. So, and realize the first quarter, we were not in the pandemic last year. So, so we're seeing that it's not really a huge pending transaction for first quarter. Closed up 9.7%. So that's showing, again, closed transactions are 60 to 90 days lag time. So a lot of these buyers or sellers, either way, were probably looking in January and February, right? So they were buying in those months. Days on market is huge. It was down from 18 to 6 days on market. So that's, oh, wait a minute, actually it's a little bit different. The average is 21, but the median is 6. So just kind of look at that. Month supply, you guys are all feeling this. Less than 1 month, 0.7 months of inventory, we're down 58%. So this time last year, we were all kind of complaining about how the market was with low inventory. Well, crap, look at that, we're down 58%, which is even worse. All right. And then the last thing before I'm going to flip to new construction because I want to compare some things for you guys. Price per square foot right now on average of resale is $160 a square foot, which is up 14%. Okay. So that's a kind of a debrief on resale. I'm going to immediately flip to new construction and work my way backwards. So remember this number. Price per square foot for resale is 160. New construction is at 174. So interestingly enough, if you're toggling back and forth, prices increased 14% for resale. Prices only increased 6% on new construction. So what we're seeing is that new construction pricing is actually cost affordable. But there's a caveat here is that new construction world has figured this out, and you may or may not have noticed, but they're doing price increases on all of their sales models, all of their pricing going into second quarter. I've heard a lot of clients literally call and say, hey, you're under construction with your new construction, and we're increasing the price by 10%. Many of those contracts allow them to just, even though it's a ratified contract at that price, to move that price up. And if you don't want to pay that higher price, they'll give you your deposit back, but they'll just sell it to somebody else. And part of that is resale's up 14%, new construction's up 6%. So they're seeing that, number one, there's a gap in their pricing market. The second reason is labor and materials is going through the roof, right? So it'll be interesting to see at the end of second quarter how they've readjusted their pricing strategies. My prediction, and just also because of my new construction background, it'll climb back up. They're gonna make up that gap difference, obviously for profit reasons, but also because of the cost of materials and labor. So just again, new construction there. I don't really look at month supply and days on market as much on new construction because let's be honest, they don't put everything in MLS. There's a lot of custom build jobs in there that are not reported in MLS. So if you are looking at supply and days on market, I wouldn't, use that as a hard number, and I wouldn't use it as a comparison to resale. I just don't think it's apples to apples. Closed sales, again, based on what they put in MLS, because this is at minimum, all those build jobs that they do or other properties, they don't put them all in MLS. Right now, we're at closed transactions for new construction in the first quarter is up 28%, right? And if you remember, if I toggle back real quick, resale in that same space was only up 9%. New construction closed units is up 28%, right? So you can see a lot of buyers, because of inventory is being so tight, they're going to new construction. We've been talking about that for the last at least 60 to 90 days. You got to be familiar with new construction. You got to know where the newest areas are. There's a lot of land development, especially in Chesterfield versus Henrico, not so much. But you can see a huge shift in the transactions at 28 versus the 9% increase on resale. Pending sales, again, a little bit interesting because not everything is put in there, but in MLS, but it's up 31% versus only 1%. Again, another trend indicator, because again, pending sales is often 60 to 90 days. Well, in new construction, it could be actually up to 6 months, right? So it could sit pending right now and not even close until July, August, September, like fall, right? So this pending is up 31% versus resale is only up 1%. And again, another indicator a future pacing of what the market's doing is because we don't have the inventory, they're going to new construction. And remember, their sales prices aren't that much different than ours. So, so this is a sales price of, remember, of resale, 321, and new construction, 389. So if you're looking at it kind of from the buyer's perspective, why would you buy, quote, a used car when you can pay a little bit more for a new car, right? So a lot of people are doing that. So when you're doing your comps for a resale property, make sure you're also pulling anything new construction. Run it as a separate CMA, but compare it, because that buyer that's in resale mode, that's looking at your resale, might just hop across the street and buy new construction. So that is your competition. For appraisal purposes and for CMA purposes, I don't want you to lump those together because they don't use them as comps, but we know buyers, well, based on what they can afford, often what they can't afford, right? And what they feel is a better value. And I think new construction is going to start to really compete with resale, especially when you only have like 6 houses to look in resale. And then new construction, you got 24 floor plans that you can pick from, and you can pick your own flooring and things like that. So that gives you an indication of overall what happened first quarter. My kind of recap on first quarter is we're seeing this squeeze continue. We're seeing a lot of buyers going towards new construction, right? And we're seeing that the prices of new construction versus resale aren't that much different, right? The price per square foot is not a huge difference there. So just make sure you're really watching that. So in my opinion, if you're in low inventory, you have 2 strategies. You can try to find off-market properties, meaning they're not in MLS, or you need to coach and consult your clients up about possibly going to new construction, because there's more inventory in new construction than there is in resale. And we looked at that before, right? So again, this is a recap of resale versus new construction. It's just crazy to me, resale, the prices are up 14% versus new construction is only up 5%. If I were on that new construction world, I would say they missed the ball. They could have actually raised their prices in first quarter and been fine. So I personally think they've left some money on the table there. But again, we're seeing second quarter them raising their prices. So new construction will get, quote, less affordable, but I still think people are going to pay it because of inventory. Again, pending sales in resale, this is a little concerning. It's only up 1%, like I said. So I think people are going off market, which is not reflected in MLS, but also buyers are giving up. They're just saying, to hell with this. I've put in 17, 18 offers, not gotten the deal. So we got to really stay in communication and almost be a therapist or a counselor for these buyers. Keep holding on, because our pending sales for the first quarter are only up 1%, just under 2%. That's not a great thing. We want to see about the same trend line. We want to see closed around 9 or 10%, and we want to see pending sales around the same amount, because remember, this is a future indicator. So I'm a little concerned that our pendings aren't keeping up with our closed. And then dollar volume, I didn't go over that. I will. Resale as a whole, we were up 25% on total volume, $1 billion, right? That's a lot. That's crazy. But then again, we're flipping into new construction. It only represents 315, right? So, so huge different. Resale still obviously is the dominant space in our market. But look at the difference between the volume increase for resale is up 25%. Volume increase for new construction is up 35%. Every indicator is showing that new construction is beating us as far as increases, except that price. So I want to go into a few area numbers real quick, and then I'm going to end with a market review on brokerages and the top agents in there. So let's just cover a couple. I'm going to cover 52. So if you go into here, I'm going to do MLS area numbers. I want to do 52 and 54 to kind of see comparisons there. So Chesterfield, years, 3 months. Again, this is for the whole quarter, but it's not just March, it's the whole January, February, March. So Average sales price in 54 is up 11. Remember the median, like the overall average in CBR is up 14. So it's not trending as high. I don't know if you guys can see that on this little. And then new listings down 10%. The average before was 14, so it's not down as much in area 54. Pending sales up 50%. Oh, wait a minute, this is resale. Oh, hold on. Let me go back to this. That throws me off a little bit. All right, let's recompare this. So we're in resale world, 54. All right, so average sales price, 313. Remember, look at last year. God, if you owned a house last year, if you owned the same house last year, it was worth 263 and now it's worth 313. If you now have any listings or any past clients that are in area 54, you should be screaming that to them. Their house increased in 19% in one damn year. That's crazy. Versus the average overall CBR MLS is up 14. So that's a damn good place to own a house and sell it. I would be selling that quick because I don't know that trend will continue. But new listings, resale, down 16% versus the average was down 14 overall. So again, we don't have as much inventory. So if I were you, if you have anybody in 54, you need to work on that. I mean, that's an amazing thing to be able to get them some more profit for their house. Pending sales down 8%. Interesting up is that the average, if you remember, for overall CBR MLS was up 1%, almost 2%. So this is people giving up. This is, I would like to see, let me flip real quick to new construct. There it is. So it's down 8%, but guess where it went? Up 50%, new construction. So the resale was like, the hell with this, I'm going to go buy new construction. And let me look at the sales price on average. I love toggling back and forth to just see. So resale was up 19. Again, it's almost, why wouldn't I buy new construction? It's not that much more expensive. And you can see that's what they're doing. That's why the pending sales are down versus new construction world is I always think of Pac-Man, like it's gobbling all that crap up. I mean, it's just crazy. So closed sales on resale, 3%. That's down. I mean, think about it. The average is 9% up for the quarter, and we're only up 3%. I think we got a lot of work to do on 54 to tell the real story that, like, hey, you can sell your house for a good price. It's just showing people are not, there's just not the inventory. Days on market, that's insane. I mean, all of this is showing you, like, if you did any time, if you farm in 54, you should be screaming these numbers that you will get an insane amount of money for your house. You're up 19% over 1 year. Like, you could screenshot that or recreate that in a graphic, but who the heck wouldn't want to cash in on that? So, and then month supply is going to be crazy. Hold on. Oh my God, half a month, down 58. So 54 is insane. So let's flip to 52. A lot of times we somewhat compare those two. And all right, so it's up 20%. I didn't write down what that, I wish I could toggle back and forth here.
Hey, Drew.
Yeah.
Where is 52?
52 is, where is 52? I write it down so I can cheat. Hold on my little cheat sheet. 52 is like Chester, kind of in that lower area. And like 54 is Clover Hills. So it's deeper down into Chesterfield.
Okay.
Which not everyone's wanting to be in that, but that's where everything's starting to push in that direction. So
Space.
Yep.
Get more space.
Yep. You get
in and
on
out.
top of each other. All right. So 52, I would say 52 is probably the more right? That's where I'm also going to go into 62, which is like Brainerd Mill area, but 54 Clover Hills, this is kind of the one that's a good trend here. So new listings down 15%. My resale, yeah, I didn't mess that up. That's overall. There wasn't even hardly any homes for sale. Pending is down. See, I think that's a big shift. Our pendings are not where they should be. We should be coming into a stronger. You go in the second quarter, I don't care if there's a pandemic or not. When you're coming out of first, going into second, you should see a higher pending number because people tend to be buying in the second quarter. And remember, pens go 60 to 90 days out. So I'm concerned that these are negative numbers. That should not be the case. Closed sales up 20%, which is great. But why?
Do you think it's because more people are doing off market?
It could be. It absolutely could be. I think that's really interesting because I always say new constructions, the numbers on MLS are not always accurate because they don't put them all in. Well, now we're doing the same thing with resale. We're not putting all of them in.
Right.
So there's
probably not enough to sway the needle, but maybe 1% or 2%.
Yeah, yeah, that's probably true. I don't know if it's enough.
So not 5% at least.
Yeah, absolutely. But closed sales up. I just think that pending number is not a good thing. That's just supply half. That's about trend of what that previous one was. So let's go into 62, 64 real quick. And after I do a few of these, if there's a specific one you want me to go into, I can. But all right, resale up 12% versus that was 20 before. It's about same as trend. That trend. Pending sales, that's up. So 62 looks like they're doing well, except for, again, that's slightly better than the average. Remember, the average for pending was just at 1.9. So you're seeing more pending transactions in Chesterfield 62 than they quote the average. Let me look at this. New listings was down 16. New listings was down 14. That's interesting. So there's less inventory, but the pending sales are happening. And then closed is up 18, which is crazy because the average is only 9% overall. So I know you guys, a lot of you saw in Area 62, that's showing that they're ahead of that trend. So in my opinion, like if you're doing a CMA, you can push a little harder on your price on that. That was a sales price, yeah. So Area 62, they can push a little harder. And then days on market average is 11. Supply is about the same thing.
Did we look at the average price for 52? What that did? I don't remember seeing. I probably missed it. But.
Let me look. Sales price. All right, so this is 62. Let me roll to 52. It's up 20%.
About 50 again there too. Yeah, golly.
Yeah. And I think it's really important that you go into each one of these, if you're doing any type of postcard, and be very specific with their area number, because if you just use those generic CVR MLS numbers I did at the beginning of this thing, it doesn't show how deep certain pockets are. I mean, if you live in certain pockets, you really can maximize your money there. So, all right, let's go to 64. Did I do 62? Yeah, I just did that. Again, 20%. Again, that's above the average of 14. New listings, interesting. Down 28 versus 14% down. Pending sales average down 16. Again, we're up 1.9. I keep saying that, but that's not, all those negative numbers are pulling everything down. And then closed that's the first closed sale that's negative of all the MLS area numbers we looked at. So does that mean in 64 they're giving up? What does that mean? Let me click on new construction. Look at that. So closed on resale in 64, down 3%. New construction up 7.9. That's where they're eating all the inventory. Like,
Everybody's building houses.
if you have any investors that has a piece of land and wants to build a
Well,
spec house, like that'll
And
be,
that's cutting agents out a lot of times too, with all these builders that have site agents and
yeah.
reps and that sort of thing. So
I've been saying that for months. Like, this new construction number is not a good thing because they're not always paying commissions because they can do private transactions directly from the builder to the consumer.
people just walking into the model home. Yeah.
Walking right in. And that's only one side of the deal. Like, they still have a house to sell. And a lot of times those builders don't, like, where are they giving their listings to? Who are they? Are they listing them? I know some teams have relationships with them, but you're only looking at one side of the coin there. There's also, yes, there's a closed transaction, but there most likely was a listing somewhere. So, where we at? Resale, pending, days on market. The days on market and the month supply is almost trending for every single thing. So that's just showing that nobody has a better advantage. There's not more inventory in one MLS area number than the other. So it's not that they're having more inventory or they have they have more supply. It's based on that demand part, which we know that. And then I'm going to go, just going to go 34. I was going to go into Henrico a little bit, 34 and 32. Just so you guys can see that. Average is 10% versus 14. I find that interesting. Where's 34? Let me try that one. Yeah, that's interesting to me. Why that's not higher? Because West End, we have nothing over here. We have, and new construction, we don't even have that much. So I'm surprised why we're not pushing that price even more than 10%. Because remember, in some of those areas in Chesterfield, we were in the 20s. You could push I think you probably could push some of the pricing in Henrico. New listing is down in this part, and pending sales is down. Closed sales is up, not for long because the trending's going down. Days on market and supply is about the same. And then if you're looking at kind of a similar Henrico, average is up 4. Again, I know that price point's a little higher. Let's see if there's, yeah, it's not that much different. You'll see a huge difference in obviously Chesterfield versus Henrico because there's not as much new construction competition. New listings is insane. It's like 17. Total home sales down. There wasn't even enough to do anything. That's trending down. So that'll be interesting to see. Is Henrico kind of like, are they capped out because their prices aren't really going up anymore? Their pending sales are going down. So is Henrico at the peak of their pricing? That's up 7%, but remember the average was 9, so they're not even as high as the average trend. And then all of these are the same trend lines too. So that's just kind of an interesting comparison to kind of Henrico versus Chesterfield. Definitely see a lot of difference in that. And again, in Henrico world, I don't see new construction having as much of an impact on absorbing the inventory. It's not controlling. Yeah, like none of that's doing anything. So in Henrico, new construction is not a factor. Completely the opposite in Chesterfield world. So anybody else want me to go over another MLS ID number before I hop to just market overview real quick? Okay. All right, so market overview is just a little snapshot into agent and then brokerages. I've always say this, don't compare yourself to someone else. It's just, if you follow them on social media, if you do a transaction with them, think about what they're saying, how they're acting, how they're promoting themselves, what they're doing to market their business. It's just a good way to start to see if their habits or trends would follow yours. So this is, I'm going to do year to date, so we can do it quarter to quarter. And this is volume by the agent. So I'm going to do resale because it does skew it a little bit. And again, this damn font is, unless I'm 100 years old, I feel like you can never see this screen. Kyle Yateman's number one. He's got a total volume is 20 million, 29 units. Jenny, again, she's a team. She's got 26 units. Is that, no. Is that right? No. Yeah, total units is over here. This is listing side, totals over here. Sorry. So Kyle has sold 57 houses so far. Jenny's team sold 30. Capital Childress is at 15. And then
$9 million, $1 million listings. It's not bad. Or sales. It's not bad.
yeah, that's insane. So, and then we got Ryan Sanford, Daler, Brad Ruckard, James May. I will tell you that I see a lot of these Mark, I feel this number 12, Austin. But I will see that all these pretty much are on teams. So yes, they're one person, but they put them in as a team unit. So I was actually printed this the other day and was like, who's really a solo agent that maybe has an admin versus who has a football team, which is fine.
Will Hamnet's by himself. Well, he's got an admin. But
yeah, exactly. There's only a couple in here that
that's all I see.
Everybody else is a team. So that was interesting. I was listening to something, a podcast or something a week ago, and they're saying teams are becoming larger, more common. I would say 10 years ago, if you had a team, you were kind of like, what? Why are you doing that? Right? So I'm not saying you need to be a team. I'm just saying if you're a solo agent, you need to realize that's competition that's different, that's trending. And they have a lot of power because they can market and they can prospect at a higher level because they physically have more money. I mean, they can send out more flyers. They can do more lavish client events because they can invest more money because it's just a sheer number game. So just want you to know that. Mike Hogan, again, he's got his own teams, number 15. Trying to think of some other ones. Strom is in them. Erin Hungerford, I saw her. Top 20, I thought that was kind of cool for her. Wally Hughes, he's at Remax. He's doing well. I mean, the Shaheen boys, they always do well, so that's not abnormal. Heather Valentine's at number 33. But I will tell you, it's interesting, like their volume isn't as high. Like if I were to kind of analyze a little deeper, is that higher or lower than last year? It'll be interesting to see. Because this is a listing side, like again for Heather Valentine, just to not to put her on the spot, but just to try to use a comparison. They've sold 10.5 listings, and they've buy side's only 3. That seems incredibly interesting to me. Deemer, who's kind of near, it's still the top 100, but Cother, he listed 11, 3 buyers. You'll also see that agents that tend to be on the top tend to be, there's a couple exceptions, to be heavier listing agents. So I preach that every day, but they definitely are going after the listings over the buys. Which that doesn't mean it's easier because listings are rough too right now. Tina McCabe, number 674, I was looking at that. So anyway, so just to kind of give you a comparison of Austin Robin, I'm proud of her. She's at mid-low. Nicole Smith is at mid-low. Shannon Murray, she's doing great. She's at West. Rick Cox, he just went out on his own and he has his own brokerage. He's number 98. That kind of rounds out the top 100. So let me flip to just firms. Firms are a little bit different than brokerages. So brokerages, see it says office report versus firms. Firms, they typically, what I found, the firms is they lump them all together. So Long and Foster has, I don't know, multiple locations.
9,000 offices.
Yeah, versus if you go by office, they're going to detail them out separate. I feel like firm report's important because you want to kind of see who are the top signs in the yard that you should see in your communities. Again, this is overall, and it is in retail only. Long and Foster is number 1, which is not necessarily a surprise. Hometown is number 2. I find that a little interesting. EXP's come up the ranks pretty quick. I mean, if you were to look at this 2 or 3 years ago, they were maybe barely in the top 10. And number 1, they're recruiting the heck out of a lot of agents, which is fine. But they're taking market share. Overall, they've got 491 units they've closed. Joiner? Hey, Kenny, I think you're on here. Your brand's represented here, dude. Number 4 in all of MLS, so that's a big deal. Shaheen's, they split off of Long and Foster there. They're definitely holding their own. Keller Williams Realty, this is Richmond West specifically. That's that MLS ID. That's not mid-load together. So you guys are in the top. Yeah, top 6.
Yeah, Brad's helping us.
Yeah. Non-MLS, that could be.
That's huge.
That's a big thing. So that's FSBOs. That's I guess that probably could lump in all that off-market stuff, I would think.
If they put it in the MLS to close it, I think.
Because
this just pulls from it.
Because this just shows the sales side. It doesn't.
Yeah.
Non-MLS doesn't show the listing, so that's a FSBO.
Oh yeah, so it has to be. Yeah.
That could be off-market stuff too. Because you are going to get credit for it, like if you're the buyer agent for it, but you're not going to get it on the list side.
Right.
So that's probably a lumped version. 219 units is going to be either FSBOs at some level. Sometimes they put expires because they're too lazy to put them back in. But I mean, let's be honest. United Realty's at 8. Remax, I coached some people there. That's great. They're in the top 10. Napier is top 10. Keller Williams, Midlothian is 11. That's good for them. Awesome. Berkshire Hathaway, Hogan is there. I think Virginia Capital Realty is interesting to me. They're in they're still number 17. Coach House and Fathom, number 19 and number 20. That's pretty impressive because they're not large as far as agent count. Liz Morris, 21. Clock Tower, again, they're smaller. They're still at 23 brokerage in all of MLS. River Fox, again, they're not super large, 27. Keaton and Company, I've been watching them. They're coming up the ranks. They're definitely recruiting more, and they are having more production, which is great. Exits dropping, but they're there. Valentine, overall, 34. See if there's anyone.
So Keaton and Co. left Newman and Dunn. They're their own thing now?
They did. They
Gotcha. Yeah.
I just met with the broker there, Susie Hall, Next Home. So she opened in the pandemic. She bought that franchise and opened. She was telling me how fun that has been.
Yeah.
Icon Realty, they're doing well, and they're recruiting some good talent there. So happy for them. Anybody else I can think of? Clover Banker, they're just getting started. I don't even know who the heck is Freedom Realty. I don't even know. I like the name. Greer Jones, she went on her own. Assist to Sell, that'll be interesting. They're in the top, which I think is going to be interesting to watch that one. They're number 69 because a lot of people are doing FSBOs because they can.
Mm-hmm.
So a lot of these at the bottom, interestingly enough, if you're kind of looking near the bottom, these are teams that have left a brokerage and did their own thing. Deborah Eager, Option 1, Sarah Bice is left, Dalton. There's a lot of MSC properties. They've left those brokerages a couple of years ago, and they're still doing. The Wilson Group is doing really well. So anyway, just so you guys some names I want you to see on the screen just to kind of watch and observe. Again, don't compare, but it's interesting to see what are their marketing strategies, what are they doing on social media, how are they branding themselves, and just ultimately how are they taking market share. So overall, that's kind of the deal. Any last minute comments before we kind of end it out? What you guys predict second quarter is going to look like? What do you think is going to happen? Anybody have any thoughts? What's going to happen? I mean, we're obviously, 21 days into second quarter. You're already starting to probably feel it. Do you think it'll change? Do you think these trend lines will change in second quarter, or do you think it'll be a lot of the same?
I think it's going to be a lot of the same, but I also think we need to get more creative in how we talk to the people we already know, because just from my past conversations the last couple of weeks, a lot of people don't know these stats, and even realtors. All we hear is it's crazy, there's low inventory, and crazy seems to be the common word, which has a little bit of a negative connotation.
And what can you do? I think it's just like social media, or just like politics. It's whoever tells the louder story is the one that makes the news,
It's a popularity contest, right? Yeah.
And it doesn't necessarily, I'm not going to be political, but it's not necessarily, I guess, fake news, but somebody's telling the narrative that's not, yes, inventory is low. Yes, there's a high demand, but there's a lot of pockets where if you sold now, you're at the peak. So why the heck you're sitting on your house and I'm going to wait till next year to sell? You need to sell when it's high and buy when it's low. Like, that's just real estate 101. So, well, cool deal. Well, I will share this with you guys, the recording, if you want to share this with other agents that are not coaching with us. It's a YouTube link. You can send it on. If you run a team, I would highly encourage your team members just to, if nothing else, watch the recording and zoom into certain stats that we talked about. But again, we'll do a recap of April's numbers next month on May 19th. All right. Well, have a good day. And those of you that are on a team, I think we're going to hop on. We're going to do a team workshop.
In 15 minutes.
Yep. So go grab some coffee, go to the restroom, and I'll see the teams in a little bit. Otherwise, everybody else, have a great day. Okay.
Awesome. Thank you, sir.
Bye, everybody.